David, about a year ago, we met and talked about what the M&A market was going to look like in 2012. At that point, you had predicted that it was going to be the best year since 2007. It didn't turn out that way. What happened?
Lindsay, first of all, it's nice to be back with you. It should have been a good year. We talked about the fact that strategic acquirers had money, private equity groups had money. We talked about the availability of debt, and we talked about capital gains taxes going up this year. All of that was true. So, should it have been a good year? I still maintain it should have been a good year. I guess the question is, so what went wrong?
Exactly.
Okay. Well, first of all, we have to look at the situation with the government this year. We were facing an election, and in other words, we were dealing with uncertainty in the marketplaces. And as soon as we finished the election, then we had the fiscal cliff. We put out a Christmas card, a holiday card to the world, which was a picture of Santa going by the US Capitol, dropping off a bag of coal for our government for what a bad job they'd done through the year.
They did do a bad job. It was certainly played a part in the M&A deal flow. What do you expect the flow to look like in 2013 then?
I think it'll be a much, much better year. First of all, yes, and I know we can smile because, well, David, you were back here last year saying the same thing.
Yeah, what gives you more confidence this year?
Okay, several things. First of all, none of the fundamentals have changed. The money that exists with strategics and private equity is still there. We still have the availability of debt. And Lindsay, although capital gains have gone up to 20%, 23.8 if you want to add the Medicare tax in a couple of years from now, it's going to look like a bargain, I promise you. So any business owner who's saying, gee, did I miss the window? My answer is no, that window is going to continue to close.
You mentioned company fundamentals, performance at individual companies, kind of stagnated at the end of the year. Do you expect that to improve in 2013?
I think we're going to see, first of all, a GDP that's going to be about 2.5% for the year, which is not great, but it's not anemic. And I do think performance is going to improve because everybody who has been sitting there, not putting out those purchase orders, not making those capital investments, not hiring, just because of the uncertainty, I think people are going to start making those decisions, and we're going to see performance of companies improve significantly.
So who are the buyers? Do you get strategic? I mean, we saw the Avis Zipcar deal right at the get-go of the year. Or is it going to be more financials? Like you said, those private equity shops do have a lot of cash as well.
They do. I think you're going to see a tremendous amount of foreign interest in the United States. I mean, when you look at Europe and the whole debt crisis, you look at a degree of uncertainty in the BRIC countries, what you really are going to see is foreign money coming into the United States. You are going to that's going to be primarily strategic acquirers, and I think both here in the United States and overseas, you are going to see this as the year of the strategic acquirer.